But I'll tell you what, I have some amazing news for you guys. It's a little bit of a long story, so I'm gonna try to cut it short as much as I possibly can. But this is amazing news for the whole entire cannabis industry and for the eradication of boof weed. Because 1/3 of Canada's cannabis greenhouses capacity is taken offline. Thank God. One after another, many of Canada's largest cannabis greenhouses and indoor grow operations have been sold or mothballed as the industry continues to search for a supply-demand equilibrium after years of overproduction. The facilities each closing anywhere from 100 million Canadian, that's actually 73 million US dollars, and more than 500 million are being closed for various reasons. Some of these operations crashed into the cannabis industry's hard macroeconomic realities, and Canadian cultivators bankrolled and licensed too much cultivation capacity before and after adult use legalization back in 2018, which led to large-scale overproduction and plunging prices for low to mids quality products. Companies also shuttered greenhouses because they failed to be as cost-effective as anticipated by both executives and investors. And some were closed after companies saddled with millions of dollars of debt, sometimes owed mostly to the Canadian government, became insolvent. When cannabis producer Pheno Group, formerly known as CannaTrust, was granted creditor protection and closed its facility in Niagara, Ontario, about 450,000 square feet of cultivation space was removed. All told, approximately 1/3 of cannabis licensed indoor and greenhouse cultivation has been taken offline from the industry in recent years. Health Canada data shows that as much as in March of 2023, there was 16.3 million square feet of licensed cultivation area for greenhouse and indoor facilities. That's down from a peak of 23.9 million square feet in the mid-2020s, and the tail end of the cannabis stock craze that resulted in Canadian investors bankrolling substantially more indoor and greenhouse capacity was then needed. Outdoor production has never been slower to come down, and there remains 63.2 million square feet of outdoor area licensed for cannabis production, according to the regulator. That's about 18% lower than the peak set in late 2021 of 76.7 million square feet. Experts say that the trend could continue until prices stabilize. And the latest example is Alberta-based licensed producer SNDL, which announced in October that it was closing its California $100 million indoor facility in odds to enhance competitiveness. The closure of that facility removed 448,000 square feet of licensed cultivation area, equivalent to the size of almost 8 football fields. Earlier this year, Smith Falls, Ontario headquartered Canopy Growth Corp closed and sold its flagship cultivation facility, $53 million US dollars, to the original owner, chocolate maker Hershey's of Canada. Other licensed producers to close large facilities include Tilray Brands, which said in 2021 it was closing a flagship facility in Nanaimo, British Columbia, shortly after acquiring it, and Kronos Group, which in 2022 announced its planned exit from its production facility in Stayner, Ontario, only to revise that plan to maintain certain components of its operations there, such as distribution, warehousing, and some research and development, as well as manufacturing a portion of the company's products. Most of the largest facilities being closed were bankrolled and constructed early in the cannabis industry's boom and bust cycle, generally from 2017 through 2020. Chris Damas, a veteran cannabis industry analyst in Ontario, said the new entrants arrived with a second mover advantage and lower cost base, allowing them to aggressively take market share from those bottom time facilities. He said Cannara Biotech in Quebec, for example, was partially responsible for the demise of cannabis producer Hexos Corp. Biggest cannabis facility, which is set to be converted for cucumber growing. Shout out to the cucumbers. And other factors were price compression in most flower categories, a lack of demand for flower with less than 25% THC, and, in quotes, so the market for so-called factory weed sold based on big volume just just dried up, Damas said. He also said some of the biggest costs, such as energy and labor, have increased since the first large-scale grows were commissioned, reducing their economic viability. And in British Columbia, he said, Pure Sun Farms probably put some value flower sellers into an early grave, while New Brunswick Organogram Holdings benefited from its cash position and partnership with British American Tobacco. In a quote, these different competitors assisted in putting the big legacy greenhouses into chronic negative operating cash flow positions, he said. And as cannabis producers are shuttering so-called factory-style cultivation operations, some entrepreneurs have turned to smaller micro-cultivation facilities, which generally come with substantially lower startup costs and produce higher quality cannabis. Last year, Canada's federal government handed out 58 standard cultivation licenses, which have no square foot limit. And in the same year, Canada awarded 130 new micro licenses, which allow cultivation only within a surface area of up to 200 square meters. That's basically 2,150 square feet. And one advantage for micro class companies is the quality of their products is generally higher than mass-produced cannabis, which seems to increasingly appeal to consumers. Well, I can tell you right now that this is a great news for the overall cannabis marketplace, because it sounds like prices are going to go up because there is a lack of boof weed in the industry. And this is Jason Beck for the High at 9 News Hour. What do y'all think about this?
I think this
Thank
is
God for the elimination of boof.
Right?
yeah, this is I think Aurora Cannabis was the first mover on this when they were posting huge losses last year, and they shocked everybody, saying that they were going to be closing their biggest operations and switching a lot of their stuff over to vegetables to try
Cucumbers.
to make more money.
Cucumbers.
What's that?
Cucumbers.
Yeah.
Shout out to the
Yeah,
cucumbers.
man. Shout out to cucumbers, man.
Yeah.
Sea cucumbers.
Girls
too.
love cucumbers.
That they do. Facts.
And pickles. And
Yeah,
pickles.
and pickles. Yeah.
No, man. I think this is a cautionary tale to all these mega farms out there, man. They're producing all this mass-produced stuff that is not quality, and you don't have enough people to smoke that, and people don't want to buy that, and you don't have the clientele. You think that if you build it, they will come. Like that's not how it works.
You-
And yeah,
if
it's,
the
And the economies of scale argument isn't. I mean, that's always been the ongoing thing since the beginning.
Yep.
But what it really is the cost per pound it's only going to get, you're only shaving pennies off to have this huge responsibility of employees, overhead. All that square foot takes so much to upkeep. So they're going to squeeze out a few dollars extra of the pound. It's better to have, like, maximum indoor is like 15,000, 20,000 square feet. After that, the economies of scale doesn't really matter, in my opinion.
in the meat industry, they take every bit of the animal and they'll grind it up, and they'll even put paste to it to make it a patty, right? And if I just feel like if this company was owned by some Project Black folks, they would just be making weed butter with all of that boof. They would have boof butter, and they would really switch the name up, and they would be like boof.
Yes, they could
They'd be
brand
like,
it.
get some boof butter. They'd be like, get some boof tea. But they would take it, and they would turn a blank into a frank. So even though they know that the real true plant is going to succeed, people are going to want that real loud. They could take that boof dough and make butter. They could make cookies. They could make, you know what I mean? Like, there are things you can actually do, or even selling, like, because you have a bunch of that stuff. But if you grind all of that shit up to shaking, you're just telling people like, yo, just extract all the oils out of it. You could be making oils, a bunch of stuff.
Yeah, I mean, most of their stuff should just get turned into distillate, but the global distillate market is only so big.
Yep. Yeah.
True.
In a lot of places weren't ready for that. You know what I'm saying? Like, there's
Sometimes you got to start out. Sometimes
Definitely
you got to be
not, but I'll
first.
tell you what, those distillate keef rolled joints, consumers keep buying those things like crazy.
What are your thoughts about that, Jason?
I can never roll. I can never buy a blunt that's already been licked by somebody else.
Oh, well, that's a good thing because they don't
Oh,
sell
man.
blunts; they sell joints.
It's the same thing to me. Same thing.
I've had lots of uncomfortable discussions with people who got way over the edge of their surfboard in debt, try and open up some big facility, and the market price drops out. And to try to explain to them, if you can't produce for a dollar a gram or less, at some point you're going to eat shit in this industry. And I think it still holds true. And I've got clients with money going around picking up these facilities for pennies on the dollar. And now their bottom line is easier to produce weed than it was before when you needed a sugar daddy to keep you running. So
Need the
our
demand
industry in the
before
United States has not reached an equilibrium yet. So we're going to see this go up and down for a while.
It sounds
the
like
demand
all
before you
these
supply.
Canadians really love American movies, and I happen to watch Field of Dreams far too many times.
Yep.